You might think Florida's real estate market is unstoppable, right? Well, that momentum may not last. Beneath the palm trees and those picture-perfect pastel houses, several cities are quietly steering toward a serious housing downturn in 2026. And honestly, the red flags aren't exactly subtle. Home prices are starting to slip, insurance premiums are skyrocketing to levels we've never seen before, and listings are piling up faster than they have in more than 10 years. It raises a real question. Is your area next? Could that dream home you've been eyeing end up becoming a financial headache practically overnight? Stick with me, because in this video we're breaking down the top 10 Florida cities where the market is already starting to fracture. This isn't just a small correction. What's coming is a major shakeup that has the potential to turn the entire Sunshine State on its head. If you're here because you want to stay one step ahead of the turmoil, you're exactly where you should be. Make sure to subscribe, drop a like, and tap the bell so you never miss one of our deep dive breakdowns, only on Discover the Cities. Number 10. Fort Lauderdale, Florida. Fort Lauderdale, known for its sunshine, waterways, and that effortless South Florida charm, is beginning to feel the early rumbles of a real housing correction. And heading into 2026, those rumbles are turning into something much harder to brush off. Not long ago, this city was considered a beachfront treasure chest, wildly popular with investors, seasonal residents, and the wave of remote workers flocking to Florida. But the tide has shifted, fast. Housing supply has exploded, jumping more than 80% compared to last year. Properties that used to command around $650,000 in 2023 are now listed closer to $580,000. And even at that discount, many still aren't drawing serious offers. Homes that once disappeared in a weekend now linger on the market for months at a time. So what's driving this? One major culprit: runaway insurance premiums. Being right on the coast leaves Fort Lauderdale exposed, and homeowners are feeling the consequences. Average insurance costs have blown past $7,000 a year, marking a staggering 50% increase since 2022. Pair that with HOA fees, often topping $500 or more per month, and affordability has plunged to new lows. Investors are also pulling back. Nearly 30% of investor-owned homes and condos are now priced below what they were originally purchased for, a clear sign that many are scrambling to limit their losses. Even short-term rental owners aren't catching a break. Airbnb hosts are reporting drops in occupancy of roughly 12% year over year, shrinking profit margins across the board. Put all of this together, and Fort Lauderdale is facing a market shakeup that looks less like a blip and more like a deeper structural unraveling. Sure, the city still photographs like a luxury postcard, but beneath the glossy exterior, the cracks are spreading quickly. So, what do you think? Would you still consider buying in Fort Lauderdale in 2026? Let us know in the comments, especially if you're a local. And if you haven't yet, hit that subscribe button. We've got 9 more Florida cities to cover, and trust me, it only gets more intense from here. Number 9. Cape Coral, Florida. Cape Coral, nicknamed the Venice of America, thanks to its massive network of canals, is drifting straight into some rough real estate waters. As we move through 2026, this once red-hot waterfront market is experiencing one of the steepest corrections in the entire state. After several years of explosive growth, home values are now sliding 5% to 7% year over year, and properties are lingering on the market for 70 days or more. So what's causing the slowdown? In a word, overbuilding. From 2021 to 2023, developers poured into Cape Coral at full speed. Construction boomed, and the housing supply ballooned as active listings rocketed from about 1,800 to nearly 4,000. But while inventory kept climbing, buyer demand simply didn't keep up. The result? A market that's now overwhelmingly oversupplied and drastically underpurchased. On top of that, flood zone insurance has become a financial punch to the gut for many homeowners. Annual premiums in some areas have soared into the $8,000 to $12,000 range, if residents can even secure a policy in the first place. And then comes one of Cape Coral's most notorious expenses: utility expansion fees. In certain neighborhoods, new buyers are hit with more than $30,000 in assessments just to connect to city water and sewer systems. Costs like these are pushing would-be homeowners to look elsewhere. High mortgage rates, hovering around 7%, aren't helping either. Locals are being priced out, Out-of-state buyers have cooled off, and the city's economy, which leans heavily on construction and tourism, doesn't have the diversification needed to support long-term real estate strength. Yes, Cape Coral still looks like paradise on a postcard, but behind those scenic canal views, the 2026 housing landscape is turning into a real warning story. If you're watching from Cape Coral or have witnessed the price drops yourself, hit that like button. We'd love to hear what you're seeing on the ground. And don't move a muscle. We still have 8 more Florida cities to cover, and the situation only intensifies from here. Make sure you're subscribed so you don't miss what's next. Number 8. Ocala, Florida. Ocala, known far and wide as Florida's horse capital, is trotting straight into some risky real estate terrain as 2026 gets underway. What was once a quiet and affordable inland refuge, far from the chaos of the coasts, suddenly became a post-pandemic magnet for families, retirees, and remote workers. But now, that once booming momentum is stalling out. Active listings have exploded, jumping from roughly 800 to almost 3,000 in just a little over 2 years, a jaw-dropping 275% increase. That's not healthy growth. That's the definition of an oversaturated market. Homes that commanded around $310,000 in 2023 are now stuck on the market closer to $275,000. And even at that reduced price, sellers are struggling to get bites. So what went wrong? In a familiar pattern, overbuilding. Developers, tempted by cheap land and massive in-migration trends, simply overshot the actual demand. Entire sections of Silver Spring Shores now feel eerily empty, almost like freshly built ghost neighborhoods waiting for buyers who never arrived. And the affordability that once made Ocala so attractive? That's long gone. From 2020 to 2023, property values soared more than 55%, while local wages barely budged. Pair that with rising insurance premiums, and you can see why buyers are pumping the brakes. Local employment isn't helping either. Ocala's economy, rooted in fields like manufacturing, agriculture, and warehousing, has slowed noticeably. New arrivals have tapered off, and longtime residents are finding it harder to handle the escalating costs of home ownership. So yes, Ocala still offers its rolling hills, endless horse trails, and that rustic charm people love. But in 2026, it's also dealing with too many homes, too few qualified buyers, and a market that's wobbling more each month. Do you still believe Ocala is a hidden gem? Or has that sparkle worn off? Share your thoughts below, and don't forget to subscribe so you can see which Florida city lands in the number 7 spot. Number 7. Tampa, Florida. Tampa, once considered the crown jewel of Florida's housing market, is watching that shine dim rapidly as 2026 approaches. Over just 2 short years, the number of active listings has ballooned from fewer than 3,000 to well above 4,500, an enormous 80% jump. Builders rushed to keep up with what looked like unstoppable demand, filling the metro with new condos, subdivisions, and entire master-planned communities. But they pushed too far, and now the excess inventory is simply piling up. With mortgage rates hovering around 6.8%, the typical monthly payment has climbed from roughly $1,800 to well over $2,600, knocking thousands of potential buyers right out of the market. Zillow is already reporting small price drops, but many analysts suspect this is just the start of a larger slide. Investors are feeling the heat, too. Panic selling has begun, with some owners listing their properties at 5% to 10% losses just so they can cut ties and walk away. Meanwhile, insurance and property taxes have surged, up nearly 40% since 2023, putting even more strain on homeowners. And then, there's the hurricane factor. Along Tampa's coast, some residents are now shelling out more than $5,200 a year purely for insurance. Homes that once flew off the shelf are now sitting for an average of 44 days, compared to fewer than 20 days only 2 years ago. Realtors are scrambling to offer incentives, bonuses, and concessions, but buyers are growing increasingly cautious. And honestly, who can blame them? Tampa's once blistering housing boom is cooling at a pace that's hard to ignore. Sure, the city still has its sunshine and waterfront charm, but the real estate outlook isn't nearly as bright as it used to be. What's the sentiment like where you live? Drop a comment below, and don't forget to subscribe, because the next 6 cities are even more surprising. Number 6. Jacksonville, Florida. Jacksonville, Florida's biggest city by land area, is now revealing some of its biggest housing market fractures in more than 10 years. As we move through 2026, the number of active listings has climbed to nearly 4,000, a massive jump from around 2,200 in 2023. It's the highest inventory the city has seen in a long time, and that surplus is finally putting real pressure on prices. So what's driving the downturn? It's the familiar pairing of overbuilding and overpricing. Developers threw everything they had into suburban hotspots like Orange Park and Middleburg, expecting demand to keep soaring. But when mortgage rates shot up toward 7%, the buyer pool thinned almost overnight. Houses that felt reasonably priced just a couple of years ago now come with monthly payments that feel completely unmanageable for many families. Fitch Ratings estimates Jacksonville is 26% overvalued, and unfortunately, the local economy isn't strong enough to support that inflated pricing. The city's core industries, logistics and shipping, have been taking noticeable hits. Jacksport volumes have dropped 14%, and that slowdown is trickling into household incomes and making loan approvals harder to secure. Insurance costs aren't helping either. Flood-prone neighborhoods have seen premiums soar more than 60%, squeezing budgets even further. And with roughly 1 in every 5 homes owned by investors, the market is now overflowing with listings marked by heavy price cuts and motivated seller energy. From the banks of the St. Johns River all the way out to the sprawling suburbs, Jacksonville is settling into a deep housing correction, one that may take years to unwind. If you're living in Jax, let us know what conditions look like in your neighborhood. And be sure to hit that subscribe button. The top 5 Florida markets facing major turbulence are still ahead. Number 5. Sarasota, Florida. Sarasota, famous for its sugar-white beaches, vibrant art scene, and upscale lifestyle, is undergoing a major shift in its housing market as 2026 unfolds. Not long ago, this was one of Florida's hottest luxury destinations, but that heat has cooled dramatically. Over the past 2 years, the number of homes for sale has more than doubled, now climbing past 3,700 active listings. And those waterfront homes that once sold instantly, priced around $1.2 to $2 million back in 2022, are being relisted closer to $975,000, yet still struggling to attract serious buyers. Zillow previously estimated that Sarasota homes were nearly 38% over fair market value in 2022, and that inflated bubble has officially deflated. The city's traditional buyer base, wealthy retirees and out-of-state investors, has begun to thin out. Rising inflation and a shaky stock market in 2024 left many of those high-net-worth buyers either hesitant or completely sidelined. Insurance costs are adding even more pressure. For waterfront properties, annual premiums between $8,000 and $10,000 have become the norm. And with mortgage rates pushing towards 7%, even financially comfortable buyers are second-guessing their purchases. Homes are now sitting on the market for an average of 91 days, a far cry from the bidding wars of just a few years ago. Realtors are pulling out every trick they can think of, staging elaborate events, offering concessions, and hosting back-to-back open houses, complete with charcuterie spreads and wine samplings. But it's doing little to move the needle. Sarasota remains breathtaking, no doubt about it, but the housing landscape has transformed completely. This is no longer a seller's playground. It's a luxury-wrapped buyer's market. If you're seeing price cuts or creative open house tactics in your neighborhood, let us know in the comments. And be sure to subscribe so you stay ahead of every major shift in Florida's real estate story. Number 4. Port St. Lucie, Florida. Port St. Lucie, once praised for blending affordability, beach access, and a peaceful suburban vibe, is now becoming a prime example of how quickly a housing market can unravel when it overheats. Entering 2026, the city ranks as one of the most overvalued markets in the entire state. According to researchers at Florida Atlantic University, home prices in Port St. Lucie sit roughly 41% above their long-term fundamental value. The median home price soared past $410,000 back in 2022, yet the typical household income is still only around $62,000. That massive disconnect is draining buying power and pushing many hopeful homeowners out of the running entirely. Inventory has climbed 35% year over year, and the pressure is hitting builders hard. Homes that were listed around $430,000 last year are now coming back to the market closer to $360,000, often paired with incentive packages. Things like closing cost credits, upgraded appliances, and even temporary interest rate buydowns to entice hesitant buyers. But price cuts aren't the only issue. Port St. Lucie is straining under its rapid growth. Schools are packed beyond capacity, traffic is becoming a daily headache, and essential infrastructure, water, sewer, utilities, is struggling to keep up. What used to be seen as an easy, comfortable place to settle has become a source of frustration for both newcomers and longtime residents. Insurance costs are adding another layer of difficulty. Waterfront homes now average more than $6,500 a year for insurance alone, a burden that's knocking loan approvals off the table and freezing buyers in their tracks. Port St. Lucie still has sunshine, amenities, and that laid-back lifestyle Florida is known for. But in 2026, the dream feels like it's hit a serious roadblock. It's a tough reminder that in real estate, rapid climbs often come with equally steep drop-offs. If your home value has dipped or you've noticed listings popping up everywhere around your neighborhood, share what you're seeing in the comments below. Number 3. Fort Myers, Florida. Fort Myers, once the poster child of Florida's pandemic-era real estate boom, is now undergoing a sharp and uncomfortable market correction. From 2022 to 2024, this Gulf Coast hotspot experienced one of the steepest home value surges in the state, with prices jumping more than 65%. Median home values crossed the $430,000 mark, fueling bidding wars and rapid-fire sales. But as we move into 2026, that red-hot momentum has cooled dramatically. Home prices are now down 6% year over year, and inventory has exploded from roughly 3,200 active listings to more than 5,000. Properties that once flew off the market are now sitting for 60 days or longer. Price cuts have become routine, and sellers are dealing with contracts falling apart before closing far more often than they'd like to admit. A major part of the strain comes from insurance costs. In the aftermath of Hurricane Ian, premiums spiked across the region. Today, annual insurance rates average $9,000 to $11,000 per home, even in neighborhoods that aren't located in official flood zones. Those numbers alone are enough to scare off a large portion of potential buyers. The rental market isn't faring much better. Tourism has slowed, Airbnb income has dropped significantly, and many short-term rental owners are trying to unload their properties at discounted prices just to stop the bleeding. And then there's the affordability issue. With median household incomes still below $60,000, many local residents simply can't keep up with the city's elevated home values and soaring costs. The gap between wages and housing prices has stretched far beyond what the market can support. Fort Myers remains a beautiful place to live, but its real estate landscape in 2026 isn't soaring anymore. It's resetting, and in some cases, resetting hard. If you live in Fort Myers or recently sold a home there, we'd love to hear what your experience has been. Drop a comment below and stick around. Only 2 more Florida cities are left, and they are the most vulnerable of all. Number 2. St. Petersburg, Florida. St. Petersburg, famous for its waterfront parks, vibrant arts culture, and lively downtown, has stepped into a housing reality it never expected. As 2026 unfolds, the city's for-sale inventory has surged past 5,600 active listings, the highest level seen in nearly 10 years. A jump that big doesn't just nudge prices downward, it shakes consumer confidence to the core. Median home values have slid from about $450,000 to roughly $390,000, and the average home is now sitting on the market for 48 days, more than double the turnover time during the boom years. Investors, too, are pulling back in a big way. Many Airbnb hosts who piled in during the pandemic rush are now stuck competing in an overcrowded short-term rental scene, facing weaker occupancy and heavily discounted nightly rates. A number of those who bought near the peak are slipping underwater, financially and in some cases, quite literally, thanks to flood-prone zones. Flood insurance is adding even more strain. Premiums have surged 60% to 70% since 2023, and for many waterfront owners, annual costs now exceed $10,000, a burden that's become unsustainable even for households with higher incomes. Local wages aren't keeping pace either. With the median household income sitting below $58,000, many longtime residents simply can't afford the area anymore. As a result, buyers who once targeted St. Pete are shifting their focus to nearby, more affordable cities like Largo, Dunedin, and Clearwater. St. Petersburg is still stylish, sunny, and full of creative energy, but its housing market in 2026 is under heavy pressure, and this correction has a long way to go before finding stable ground. Have you noticed homes lingering longer or prices sliding in your St. Pete neighborhood? Share what you're seeing in the comments, and make sure to subscribe. The #1 most vulnerable housing market in Florida is coming up next, and trust me, it's a shocker. Number 1. Lakeland, Florida. Lakeland, tucked between the powerhouse metros of Tampa and Orlando, was once hyped as Florida's next breakout market. It had affordability, a strategic location, and all the momentum anyone could ask for. But as 2026 arrives, Lakeland now holds the title of the most vulnerable housing market in the entire state. And the numbers paint a very clear picture. Housing inventory has surged from just over 3,000 listings to about 4,800, marking a 60% jump in only 2 years. Prices that previously climbed to around $350,000 in 2023 are now slipping backward, with some listings shaving off 2% to 4% month after month. So what triggered this downturn? First and foremost, overbuilding. Developers went all in across South Lakeland and North Polk County during the boom, flooding the area with new subdivisions. They gambled on endless demand, but that demand has dried up. With mortgage rates hovering near 7%, many local buyers can no longer qualify, and the steady flow of out-of-state transplants has slowed dramatically. One of the biggest warning signs is the massive investor pullback. Roughly 31% of all active listings are now investor-owned properties, and many of them are being discounted aggressively. Panic selling isn't creeping in. It's already here. Insurance costs are applying even more pressure. Even though Lakeland isn't a coastal community, it hasn't escaped Florida's insurance crisis. Premiums have surged more than 40%, with the average homeowner paying between $4,000 and $5,500 per year. For many buyers already battling inflation and rising interest rates, that expense is a deal breaker. Economic conditions aren't helping either. Lakeland's job market, largely tied to logistics, trucking, and warehousing, has cooled significantly. With slower migration, fading affordability, and softening employment trends, the housing market is being squeezed from every direction. Lakeland had its surge of popularity and promise, but in 2026, it stands as the clearest example of what happens when growth accelerates too fast and demand doesn't keep up. It's a cautionary tale for the rest of Florida. If you're living in Lakeland and have seen the shift firsthand, drop your experience in the comments below. If your city made this list, you're definitely not alone. And if it didn't, keep watching, because the trends emerging in these 10 markets may be early warnings for many others across the state. Want to stay ahead of what's coming? This is your moment. Subscribe to Discover the Cities for weekly deep dives into America's shifting cities, volatile housing markets, and the economic forces shaping the next chapter of our future. We bring you the real data, the real stories, and zero sugarcoating. Because what happens next affects far more than home prices.